Good morning, traders. I'm Michael Sabo with RJO Futures on Friday, March 1st, bringing you some commentary here in the energy market. So let's get started here. Let's talk about what's been going on here this week. Well, if you take a look at the daily chart here, the April oil, most of what we've seen here price action-wise, we've been up, we've been down, but we've seen a lot of consolidation here after that recent slide lower. And here on the overnight, the market did weaken up here even a little bit more. And we are trading right now, we're down right around about $91 a barrel. Just a little bit underneath that here. So we're down a little over $1 here right now. And you know, prices went down to almost 90.5 a barrel. And if you look back at some of my prior posts, this is kind of an area that we were targeting initially around that 200-day moving average, which was a little bit higher. We consolidated there for most of this week, taking another leg down, and you know, with the idea of possibly touching around this 90 to 90.5 area. And of course, we touched there here on the overnight. And a lot of the reasons of why we're seeing a weakness here in the energy markets, you know, you look at some of the economic data coming out here, and I've mentioned this in prior posts before. A lot of what we're seeing, in my opinion, is that I don't think we're truly in an economic recovery. We get some good data out, but then we do get some follow-up with some bad data, and so we're kind of just, I think, skidding along the bottom here right now. And with the supply side of oil, what we've seen here in all of these recent, you know, DOE reports here, that we've been seeing continuations of a build, and we got that again here this week. Now, it wasn't as big of a build as they were looking for, but still was over 1 million barrels. So when you look at our stockpiles, you look at our year-over-year stocks, you look at our 5-year average, the oil market certainly, in my opinion, appears to be very well supplied. So when we got up, as you know, I mean, we got up around that 98 half area. The question, a lot of it had to do with why is oil prices as high as they were. And I think a lot of that was a function of what we saw in the equities markets kind of dragging it up there. Well, again, as I mentioned, some of the data coming out here right now hasn't been that great. So we've seen equities kind of start taking a little bit of a breather here. Outside markets globally were weaker. That's helping put oil under pressure. This morning here we had some manufacturing data out. UK showing contraction there. We also had PMI out of China, lower basically than expected here, and kind of slowing down there. So the big question remains, something that we've talked about before, something that we've talked about in our outlook here for 2013, is that the demand side is very questionable right now. So again, looking at the basics of what moves commodities, supply and demand, you got, I think, ample supplies, very questionable demand, and according to these recent reports, even the demand suggesting that we're seeing a possibility of a slowdown. That's helping, I think, put oil under pressure. In addition, take a look at that dollar. I've been talking about that in a lot of these several posts here. The dollar has been really firming, and that's kind of helping keep a lot of commodities under some pressure. Take a look at that gold market and what it's been doing there. So, you know, you've got a lot of different things that are coming together. You know, we're putting pressure not only on the energy here. Obviously, Brent's weaker here also. Here, that's off about $1.27. You know, I've talked a lot about that spread in the past there, the Brent WTI spread. There's some opportunities there. We've really seen that kind of narrow in here a little bit. Brent's trading around 110 right now. The only thing that's really bucking the trends this morning is nat gas, which is a little bit firmer. April nat gas right around about 350 here. But the complex here, the RBOB and the heat, are both weaker, both off about 3.5 cents, 3 3/4 cents. So seeing some pressure there as well. So, you know, question is now, where are we heading from here? Well, this afternoon we could see, you know, a little bit of short covering maybe here as we're heading into the weekend. Next week, obviously, we'll take a look there. I think the market might start finding a little bit of support there in the oil market. Short-term technical indicators, in my opinion, look kind of oversold, so we could start to see a little bit of a bounce. Give me a call, shoot me an email, get you on that distribution list here for the DOE and API numbers that come out, what the expectations are, what the actuals are. We could talk about some strategies as well. A lot of opportunity in this market. As you can see, I mean, look at some of these moves that the market's making. You know, whether you're a bull or a bear there's opportunity on both sides of this market. Call, shoot me an email. We can get into more detail, talk strategies. And of course, remember that, you know, futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.